Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Hopefully, Bob can pop on in a few minutes after his other spot is over. Hey, Patrick. Good morning, Davey. Good morning, George. Yep. Remember, it is Labor Day weekend. Stocks closed on Monday. Futures still open. Futures limited trading. So keep that in mind, and they do open Sunday night and they close early on Monday. At least I'm talking about the financial futures. So still some trading going on. We'll still be here to do a market prep on Sunday because the futures open up. I really wish we could get additional day off without the futures, but since Europe isn't closed down, and Asia isn't closed down, you gotta keep them going. Good morning, Anissa. By the way, I am recording Jim Aereo Future Ed podcast this afternoon, so the live stream might be a little late. So keep that in mind, and it will be shortened today because I will have been talking for quite a while. Coco thinks it's only up now after non-farm payrolls. Remember, we got CPI numbers next week, and why is it only up now? That's another, oh boy. Hey, happy Friday. Good morning, Options 22. Hey, Waka Waka is back. We can all, Waka Waka, you missed the sell-off, Waka. What happened? Hey, Legion Reaver. Good morning. I don't even have to respond to the other comments. 8 plus CPI, but non-farm payroll was expected with people losing jobs and off taking out multiple jobs. So market taking this as bullish. Well, any reaction would be that the Fed's only going to do. I mean, now the narrative, and I talked about this. I was actually talking about this yesterday with Bob, and I think I mentioned this on the stream yesterday. The pivot or the pause, I mean, people still use the word pivot. 50 basis points is the new pivot. Means the Fed's getting dovish. It's just all absurd. So, $1,000 question. Should the bulls stay long or cash out by the end of today? Statistically, we favor, if we close above today's high, I'd watch the closing price. If we close above today's high, we can see some follow through the beginning of next week. Keep in mind the markets should be quieter because on Monday, but we can see some follow through on Tuesday. So that would be the key thing. I'd be watching today's close. Let's see. What are your thoughts on uranium stocks? I am very bullish uranium. Especially, I've been talking about uranium for months. Trading around a core position, but as uranium gets more and more momentum, finally retail's waking up a little to momentum. It's getting publicized, which means we'll still get choppy, but I am bullish on some of the uranium stocks. So that's where we sit. Non-farm payrolls, let's just review stuff coming in slightly better. The headline number coming in slightly better than forecast. Unemployment rate ticking up again. That's not really bugging me because even the Fed said they're expecting that to get to 4%. And that's, we got some noise in there. Average hourly earnings missed. Okay, so that actually was sort of like being maybe things aren't as bad with wage inflation. But this is one report. Although we did have June revised down pretty substantially. Let's see what else. Participation rate ticking up pretty big. So that's what's interesting. We'll get Bob's take on that. I don't have to keep beating that. Let's get to the price analysis. Factory orders coming out at 9, very minor. Then we got the rig counts for your crude traders. Pretty green, especially oil, based off that little bounce off the recent low area with crude. And then everything else is green. Remember, we got that percent beat buy above today's high. We had that snapback rally yesterday afternoon, which I talked about. We should see some follow through unless you don't close above yesterday's high. FOMC odds still favoring that 75 basis point, pulling back from about 70 to 62%. Everything's going to be, I think, decided by next week's CPI, but it's either 50 or 75. And if they go 50, they're still hiking through the rest of the year. So There is no pivot. And 50 is a new pivot is a ludicrous statement. Still a negative gamma. So can you see upside and downside juice? Yes, this just means we got volatility. So you still have to be prepared for it. And we pulled back a little, but still marching higher. Your breakout. Really nice basing. Breakout above there. And it's in rally mode. Again, we're just taking this out. So expecting the rally to continue unless we really break back down. The only thing that would put me into to non-rally mode, and it doesn't have to remain this strong. It can shift a little choppier, but would be a move back below 39.72. 39.72 is my key line to say we're testing another area, but let's put on our other harmonics, which we have up here. You see the purple ones. Purple ones. So we're closing in on this 25% and some major topping areas from the 30th of August, so 4,009. If we do get above that, if the rally really picks up some more steam, I'll give you my intermediate levels. These are only good for today that I'll be watching is about 4,031. I'd be surprised if we kept getting them, but with negative gamma, if we really got go-go juice going, the major, then we got to rip your face off rally be 40.46. I doubt that's going to continue much after the open, but those are the targets, the upside and the pullback target would roughly be 39.74. The minor thing I'm watching is right around this 4,000 pivot going into the open. So that's where we sit. Remember, we got to get, before we get this next major, we got the double hump. We finally getting out of oversold condition. We got cycles turning up. And if you look at this on the daily, this 4,031 with the convergence with the daily rotation zone is a very key area, not only for today. But you want to know if, I mean, it looks like unless we get some major selling pressure, we're definitely going to close above today's high. So that's my key follow through area. On a even stronger rally, not necessary for today, but in case you can't tune in on Sunday and going into next week, remember Labor Day on Monday, but where I'll be watching between Monday and Tuesday, if we did get through this 40.31, would be the 37.5 harmonic. I'd be really about 40.62 to 40.70 with the key close from this big sell-off on the 26th of August. Remember, that was the Jackson Hole speech and closer to the other side of the rotation zone on the daily chart. So that is my limited upside for right now. We got to get these daily cycles back at the top, because then we're still going to be doing daily cycles at the top, weekly not at the bottom, so we can start watching. And the secondary move off the primary sell-off is going to be key. Okay? That's going to be key. Remember, you want to see the secondary reactions. Markets don't go in one direction all the time. All right, we get the secondary reaction. Although we have some people who constantly say markets only go up, even though when we've had 2 complete red weeks, markets only go up. Well, we could go up for a few days. Not unexpected. NASDAQ 12,404 trading against that right now. The next little area is 12,455. I'm going to give a zone in here. You got about 12,455 to 12,500 where I'm watching for. If we do continue higher today, that's where I'm watching for a potential short-term rollover play. And that takes us almost back to the declining rotation zone. The next major thing I'm watching is the close from the Jackson Hole speech in the rotation zone. The key levels from your retracements. The key levels, and actually the 37.5 is higher. These 25 is just reinforcing that next zone, this 12,450 area, 12,455. And then the next major zone would be this 12,620 to 12,664. Let's just blow through some of these again. Dow, Oh, by the way, NASDAQ, unless where we got to do the pullback level. I'm staying in a bullish mode unless we drop back down below 12.3. 12.3 would then negate the breakout. 12.3 is very key on the NASDAQ. Dow, next target, 31,960 area. And then above there, before even that level, I'd be keying off of this key gap open reversal bar with the declining rotation zone about 30 to 100, 32, 105, 32, 100. The Dow off the open, unless we get really back below, bumping this down just a hair. Right about 31,680 takes me into daily bearish. Above there would just be choppy to bullish. Into a clear path move, but your key breakdown zone on the Russell is right here, about 1851. Then on a continued rally through Sunday/Monday, it would be 1869. Key levels to stay in bullish mode as long as we don't drop below about 1824. So that pretty much knocks out those. Let's just peek at the DAX. Finally getting the rally. Yes, this was a little mini double bottom. Just wanted to point that out. I did not put it on this chart, but that was valid. And here were the targets, and you see pausing there and then continuing. There's some substantial DAX resistance going into the European close at 12,940 area. And the key support level on the DAX right now is right around about 12,760, 12,765. And this is just another recovery rally before the rollover. And I'm going to be watching in the rotation zone going into next week. Notes, trying to put in a little bounce bottom. Remember, we have a gap play here to the upside. Then I'm watching for the next potential rollover play, but I'm watching really intraday for this to stall out near yesterday's high if it does continue. I would not be surprised to see this remain an inside bar. We probably get a rollover, an upside play a little to the next week, and then trying to put in a more substantial bottoming formation in here. So notes are pretty much off the table. Dollar index pulling back against some key support with the rising rotation zone. Nothing going on in there. Inside bar from yesterday, unless we really get some momentum going. It's sit on hands in the currencies and dollar today. Crude, little reversal, aggressive percent B buy above today's close, and that would just be for a continued short-term pop coming off of key support right down here. Other than that, not much going on from my perspective with crude today. That's the only thing I'll be keying off of is the closing price. Intraday, it would be based off a little break above here, but it would be a scalpy play to about 90.50. So nothing unless you're really scalping that out. Nothing going on there. VIX triggering this very sloppy double top, already hitting the first target. So as long as we don't get a substantial bounce off this, I am watching for some continued price action, which reinforces that continued couple-day rally on there. What else do we have? Euro, again, with the dollar euro inside bar with yesterday. By the way, this is now a triple bottom. Can't use those targets. There is still a trade above this peak area of about 100.80, but that would just be for a pop to about 101.60. Not a huge pop. So that would be a little short-term play, especially going against daily cycles. Bitcoin, you got a little pop with the NASDAQ. This would just be a corrective rally. And by the way, again, the double is off the table. It's now a triple bottom. You can see clearly the only play off of here then is really the a breakout. Come on. A breakout above about 24.35 to about 28.35. Tesla, Remember, triggering the double, you're getting the bounce play in Tesla. The key little areas above about 279. Next area I'm watching 284.50 to about 286 on a continued play before the next rollover play in Tesla. Again, we're double top here. You know, you might not even get that high. 282.50 would definitely be a little area to watch for also. We're going into a ton of overhead resistance on Tesla. And remember, for doubles, we watch the candle bodies between the lows for double tops, the lows, and the candle bodies going into that trigger area. And you see the candle body right there, reinforced there, and the declining daily rotation zone. So that would just be a quick little pop play to the upside before the probabilities kick in favoring the lower. Spiders. Next key areas, we're trading pre-market 431, 402.21, and then I'm going to 404.54. That's just not for today. Key support coming in at about 399. So that's my key support. We start getting back below 399. We got this gap. So pay attention to that. Not just for today, going into the next couple days. Remember, spiders don't resume trading until Tuesday. Same with the Qs. Qs also remind, that's Qs trading 302.42. 302.42, breakdown zone roughly about 302. We'll really keep an eye on this. Is pretty close, 302. Key resistance on the Qs coming in at 304 and then 306. On any pullback, I'm really watching this 302 area, and then now your key support coming back is that gap fill and the 299.50 roughly. If you're doing, that's not just for today, but once we break down below that again, then it's back to bearish mode. Where do we sit? Hey, happy Friday. Shopify stock looks like it's in a good put option. Maybe Bob can't attend this morning. That's fine. So we'll just get his take at some point. Shopify, I'd be watching before a put position for a little more rally coming off of this very strong base. And then it would be Shopify looks, if it closes above yesterday's high, it's still in for a short-term bounce position. And then I would be looking for a rollover play. Okay, you still got daily cycles at the bottom. This could easily try to test the support. We get some markets on. That was a 4-hour play, by the way. There is no daily play in that. The daily play, I'd be looking for key resistance around 32.60 for, again, can't give individual trading advice, but that would be an area I'd be watching for a rollover play. AMD hasn't hit its target, but looks like it follows in. Well, the semis are trading together. Remember SMH? SMH hit its target, and we're getting a little reversal play. I'm now watching for the gap fill play in the SMH with some continued strength, and then possibly a slightly higher before another rollover play. So AMD will be a gap fill and then another potential rollover play. It yesterday closed below the 62.5, so we're longer term, we're focusing on 75.72 to 71.60 after we get the pop. We'll look at sectors this weekend, Coco. This market is tough. People that buy every dip can make money in Fed-fueled bull markets. Like Mike said yesterday, markets just aren't for everybody. Paper trading education may be best. Yeah, if you're not nimble, or I'd be waiting for the daily and the weekly setups. And you use smaller positions with the bigger time frames. Remember that. You can position sizing is key. Risk management and position sizing. I got through the spies. Let's see if there's anything else. Not seeing much else. Let's just peek back in the S&P. Remember, we've already launched this going into the open, so we're up against some key support. So I'm going to be watching to see if on a pullback play going into the open, how that holds on any pullback play. If we do get that going into the open. Hey, John. It's stalling right here, but you got 5 minutes to the open, and we're sitting here against some major August 31st resistance. You really need to get above about 414 to make another move. So this could be some resistance. I'm going to be keying off the tick also going in right into the open to see if the tick really reinforces with some tick readings above 1,000 to 1,200. All right. Going to wrap it up. Again, I'll probably be a little late coming into the Friday afternoon session, recording the Jim Iorio podcast, which will drop on Monday, and you'll get some of my longer-term thoughts and longer-term key levels. So pay attention to that. Thank you, everybody, for tuning in. And let's just see. Used your levels to sell my puts in UAL yesterday for a nice 50% gain on a day. Thanks for the education. Well, you're welcome. Again, I hope these things help you roll out your trading plan. No, I guess he got tied up on his other thing. He'll be back. You're welcome, Anissa. With that, I will talk to everyone later. You are welcome, George.